With the crypto fear and greed index sitting right around 18, a lot of people are nervous, a lot of people are worried, and a lot of people are fearful of what the future of crypto, what the future of Bitcoin does hold. So in today's video, I kind of wanted to assess some of the on-chain metrics as well as the technical analysis to simply just say my opinion on where I think this is going and how I think it's going to play out. So of course, with that being said, let's skip the BS, let's skip the fluff, and let's get straight into the good stuff. So what we can see, of course, is over the last roughly 48 hours or so, we have seen this constant decline in the market. You've seen it, I've seen it, all of our portfolios have seen it. But at the moment, still, I do believe we are still floating above the water. Okay. Now, are we sinking a little bit? Sure, absolutely. And things are getting a little bit more rocky, right? We're starting to get to a point where it has to make a move soon, but we are still okay. And so what I'm going to talk about is there's three things that I wanted to focus on today, being the leverage ratio, exchange inflows, and I wanted to talk about the exchange whale ratios, as well as what we're seeing from the overall price and how I plan on playing this thing. Okay, so let's go ahead and let's get into that. So what we're looking at right now is an absolutely extreme growth in the estimated leverage ratio. What this basically means is the amount of open interest on exchanges, the amount of open interest in the market. How many people are putting in leverage? How many people are taking on leverage, taking on some of these higher risks? Now, what's interesting about this is that typically speaking, this is going to be something that we see in two scenarios. Scenario number one is leverage increases dramatically when the market is increasing because people are getting greedy. We also will see sometimes that the leverage ratio will increase dramatically as we are seeing prices falling due to the fact that people are confident and so fearful that they believe it's going to continue falling. So they start to take on some of these short trades. They start to bet that the market is going to fall. And as they do that, as they get more confident, we know that the whales are very good at reversing things in their favor. You know what I mean? And so if we're seeing this extreme confidence that the price is going to fall, well, sometimes we'll start to see the whales really take over and push the price completely back in the opposite direction to liquidate many of those leverage traders, which is called a leverage shakeout. Now, we've seen both of these scenarios, right? We've seen a scenario in this nature in which the market absolutely tanked. What happened was that the leverage tanked as well. The longs, the people who were bullish, they got smashed. And then from there, when people got so confident, this is over the summer, this is April to July of last year, 2021. We could see that as the price continued to fall, people were getting more and more confident that the market was going to fall. We saw the crypto fear and greed index absolutely tank during that time as well. But what happened is that since people got so confident that the price was going to drop, what they actually went ahead and did is started to take on some of these short positions. Again, they're betting on the market to fall. And as they did that, as their confidence that it was going to fall got so much higher, as people were saying it's going to 20K, it's going to 15K, well, what we saw was that the price started to reverse. And as it reversed, our leverage saw a shakeout to the downside, and then the longs came back in. And so you can see the whales were a big part in that, in which we saw that the whales started to accumulate a lot more. The whale leverage ratio or the whale exchange ratio went absolutely through the roof. And next thing you know, all of these shorts that caused this spike in leverage, they got smashed. And now we can go ahead and pair that with the whale exchange ratio, the exchange whale ratio, my apologies. And you can see that that seems to be what could be playing out here. So just similarly as what we saw earlier, we saw the big fall. We saw prices falling. We saw the leverage ratio increasing, right? But look at how, as we found this bottom around 30K, right before we put in a lower low, the whales turned this thing around. We saw the amount of the amount of money and the amount of transactions happening from the whales on the blockchain absolutely spike up to the top, turning the market around. The whales took over, pushed the market to the top side, and then next thing you know, we see this leverage crash because they liquidated many of those short traders. It was kind of, it's manipulation at its finest, but I mean, what can you do? Well, what we're seeing right now is that just 2 days ago, yesterday, or let's go ahead and say this was on right here. This was earlier this week. This is 2 days ago. We saw that as this big fall is happening, we are in a macro uptrend on the exchange whale ratio. And what that means is that we're starting to see these whales starting to take a little bit more of a pack. They're starting to get in. They're starting to purchase a little bit more. This doesn't say they're buying or selling, but what we saw from our statistics on the live stream from on Wednesday, we could see that the whales have been accumulating. And so when you see they're accumulating mixed in with the fact that the exchange whale ratio is increasing, it says that the whales are starting to take over a little bit more. And we're seeing this uptrend similarly to what we saw back in the summer, which definitely could say that the whales are getting ready to do a massive bullish liquidation event to the top side, in which we see this leverage in the short term get smashed because the whales are able to push the price back up as they do mass accumulate. That's theoretical, that's hypothetical. It's definitely not for sure going to happen, but compared to what we saw in the summer, it is a very, very similar setup. And now something we can also look at in terms of how we are seeing these interactions happen with some of the retail investors is that you can see that when we look at something like the exchange inflows, basically what this says is how many people are moving their money back onto exchanges, or moving their Bitcoin, my apologies, back onto exchanges likely to sell it. Well, what we can see is that as this is happening, as we are starting to see the price falling, even less and less and less people are moving their Bitcoin back onto exchanges. That means they're holding. That means they're sitting tight. And so what that means for us is that although there are the strong few who are selling, we saw this little wick here, the amount of people selling is decreasing. We are in a macro decline in terms of the amount of people moving back on the exchanges and the amount of people holding. More people are holding. And when you mix in the fact that more people are holding, which means inherently less people have to be selling, mixed in with the fact that the whales do seem to be accumulating right now, as the shorts are getting a little bit extra confident, my opinion on this thing is that we are definitely still in the ballpark to see some pretty strong growth from Bitcoin if we are able to maintain above $39,618. My opinion is that in the short term, all of that possible bullish thesis and that bullish scenario gets invalidated if we do fall below our previous macro low, which is sitting right around $39,618. So my whole game plan right now is how I'm going to take advantage of this thing. Let's make me a little bit smaller. Is I'm going to be looking at this range. You guys know I love my ranges. Personally, I'm under the belief that if we're able to clear $43,403, we're likely going to work our way back towards maybe $45,000 to $46,000. One of the reasons I say that is if we study the Bollinger Bands, one thing you can see is that we are extremely extended into the bottom side of our Bollinger Band envelope. And what that means is that we have seen 2 standard deviations away from our moving average, which generally means that if we are going to continue to see this decline, likelihood is we're going to see a push back up towards this moving average. The price of a crypto can only maintain 2 standard deviations away from a moving average for specific amounts of time before they will resort back to it. And I think the level that gets us back up to this 20 SMA, which is currently at $47,000, is $43,400. Looking at our VPVR, you can see that that is really our next strong peak. Once we're able to do that, likelihood is we start to roll down into this valley before having this eventual bigger hill to climb. But you can see that that is a strong level in terms of the volume profile visible range, the VPVR, meaning that we clear it. Likelihood is it is a lot less resistance to start to, to hold us back from pushing to the upside here. And if we do look on the 4-hour charts, one thing you can see is that that is more of a macro level of resistance on the 4-hour charts, meaning that if we clear it, we're likely setting a higher high, which is a sign of a short-term uptrend as well. So overall right now, the whole game plan for me is I'm going to take on a short-term trade if we are able to clear 43,400. If we do get above there, I will take on a short-term trade, likely with a stop loss set around $42,000. If you do want access to that trade when I do it, definitely go down to the link in the description. It'll bring you over to the Patreon. That's where I do any buys. But until we were to either see 43,400 get cleared or the loss of $39,618, I'm really not going to do much because there is the chance that we will see some ranging in here now, especially if the whales are getting ready to load this thing up. Best case scenario is we do not fall below or go really down to 39,618, because as long as we are able to put in a low above there, we are still seeing this bullish divergence on the RSI, in which we set this lower low and a higher low, which definitely could allow us to see a larger move to the upside. So overall, things are still looking okay. Things are definitely looking more bearish than they were 2-3 weeks ago, but we are still in bull territory in my opinion, as long as we're above 39,618. And so I will continue to update you all as that does play out. So overall, I hope you guys did enjoy more of my bullish thesis here. I don't really mean to spread hopium in any way, but I do want to provide the opinion that is, kind of sitting in me a little bit heavier, and the bullish opinion is a little bit heavier in terms of the realm of possibilities, and so that's why I'm sharing it with you all. So with that being said, that's going to be about it for today's video. Real short, real sweet, straight to the point. So I hope you guys did enjoy. Of course, if you did, you can let me know anytime by simply just smashing that like button, and if you want to see more content, just subscribe to the channel. But with that being said, I will see you all next time. Peace.